Hello everyone. Today I am going to discuss briefly about why certain companies trade at higher price to earning multiples. Now whenever we try to buy any kind of stock or when we get into the primary investigation of any company while purchasing shares, first parameter which is given due consideration is price to earning ratio of the company as well as the average price to earning ratio of that particular industry. Now it is always being a puzzling question whether to buy higher price to earning ratio companies or to buy a lower price to earning ratio companies. And why do these companies have higher PE ratio and why certain companies have low price to earning ratio? In this video, I am going to discuss why certain companies are trading at higher multiples of PE and what are the primarily reasons for this high to price earning ratio. To start with, there are few examples in Indian markets like 3M India, Hindustan Unilever, DMart, Avenue Supermarket, Bosch, which are consistently trading at higher price to earning ratio. And recently, there are certain companies in which we have seen a significant rise in PE multiples. For example, Adani Enterprises, Dixon Technologies. I would like to discuss the why part of this, why high price to earning ratio. Now, there are two broad cases of this answer. First case is when the market expecting very high growth in terms of sales and profit, then there is a high price to earning multiples for that particular company. A classic case of this is Avenue Supermarkets, that is DMart. The growth of this company is consistently being in the bracket of 30 to 40% in terms of sales and somewhere around the same in when it comes to net profit. As we all know, the retail industry is having a tight profit margins. Even in this case, even after this, the DMart is having around 5 to 6% of net profit margin consistently over the years, which is impressive. And that is why this company is trading at higher price to earning multiples. Now it used to trade around 100 to 120 PE ratio before pandemic, but now that ratio, price to earning multiple ratio, is in the bracket of 200. Now why this rise is seen in past 1 year? The reason being that the company entered the online delivery business and they came up with a unique model where it's a combination of offline and online modes of shopping. The DMart Ready app, which is promoted by Avenue Supermarket, it allows you to order through app and you have option to get delivery in the offline mode, and also you can go to the respective nearby convenience store of DMart Ready and pick up your order. So this unique uh, facility which is provided by DMart is could be behind this higher multiple ratio, and obviously the broader reason being that the Indian retail market is grossly unorganized. There are very few players in this category of organized retail, one of the largest player being DMart. Now there are multiple reasons even in case of DMart why the ratio is high. I just pointed out one reason which I thought could be a prime reason. Now there are companies which are trading at higher multiples of PE since very long time. A good example is 3M India. It is trading at higher multiples consistently over the years without showing any growth in revenue and profit, significant growth in revenue and profit. Why is it the case? Because 3M India has a very wide portfolio of products and very innovative products which commands uh, a kind of very good reputation in the particular product category, whether it is car accessories, whether it is home products, or and they have number of products ranging in hundreds of products, and all the products of 3M India are innovative, and certain product categories command monopoly in that particular sector. That is being one of the reasons why 3M India is commanding such a high valuation. So these are some of the basic reasons of higher price to earning multiples. When you are buying a particular stock of a company, you must get into this primary investigation that why this company is trading at higher multiple ratio. Unless and until you don't have clarity on this high price to earning ratio, I would say it is risky to buy such a company. You need to have a certain justification of this higher valuation, otherwise it could be just a boom and bust case in the market. Thank you for listening to this video. I would be putting many such videos regarding the fundamental aspects of purchasing stocks and regarding multiple parameters in case of fundamental analysis. If you have anything specific you want me to address, you can put it in the comment box. Thank you.